Good afternoon and welcome to the Mashreq Bank webinar on Middle East Spotlight on Green Finance. We're joined by three distinguished speakers, and I'm going to kick off with our host this morning, Badar Chaudhry, Senior Vice President, Sector Head Energy at Mashreq Bank. Badar, good hello to you, and I'm wondering your own thoughts on this sort of big subject. I would suggest we're at some kind of a tipping point for green finance. It seems if COVID wasn't dominating the headlines this year, then perhaps green finance or low carbon investment or renewables or some version thereof would be a dominant feature in our lives.
Good afternoon, everyone. Well, I absolutely agree with you. I actually sort of see the COVID accelerating the sort of impetus and the support that green finance is getting with respect to the next investment horizon in terms of opportunities, in terms of mandates, and that is clearly visible with conventional hydrocarbon players in the region and globally as well. So I think COVID has most certainly pushed the entire social pressure into actionable sort of initiatives across all sectors.
When you say, Badar, it was an accelerator, what was the sort of state of play? How would you describe it, let's say, at the first quarter this year? And what particular elements would you have accelerated?
Yes, so if you are to sort of look at just the conventional hydrocarbon sort of hypothesis, which was peak oil demand 2050, looking at sort of monetizing assets in that sort of mechanism. Right now, this sort of initiative has led to the realization that the methodology of using energy is no longer reliant or does not need to be just built around hydrocarbons. That sort of acceptance and sort of push from a social perspective has resulted in sort of the social pressure of sovereign commitment, leading financial institutions to actually chase this this policy reform. As you know, and again, I think it is also a combination of the sort of initiation or getting the economy back on track that the sovereigns want to get it right this time around. We know that, for example, Europe has announced a $600 billion initiative around this economic stimulus, but around green energy, green finance, will sort of automatically gravitate around that. So that's the difference. That's the momentum, accelerated momentum that we see.
It's Bruce Johnson, Associate Director, Structured Finance, Treasury and Insurance at Masdar. Is this all old news to you, Bruce, at Masdar? You guys are yawning. We've been...
I think 550 billion euros of green projects to be invested, using that money over the next 7 years. On top of that, you've got China, which announced its own COVID stimulus plan. You've got Japan, again, COVID-19 economic stimulus package. They set aside, I think, almost 900 billion euros to support corporates and so on in respect of on-site renewables. And then Canada as well, for example, and I'm sure this applies to other countries around the world, they're actually making the bailout of companies who have suffered as a result of COVID-19. They're actually making, the tapping into that package conditional upon committing to report on, what they're doing around their ESG. So, for us, that's just a great opportunity, right? We're a developer. And all these countries around the world and corporates are having to kind of, you know, shift and do things differently if they haven't already been doing so. And that just creates.
On that point, Bruce, I mean, it's fair enough to say that we and Masdar, if we can speak in the collective we as our kind of trophy, that Masdar has had this sort of pioneering position for 10 years. But are we not missing the opportunity to take advantage of our first mover advantage, if indeed we are not also leaping forward at this time, where you know, we're seeing a lot of austerity rather than stimulus in the region? Wonder your own view on that is vis-a-vis a more macro view in terms of the investment into the green economy, or sort of that leap forward like we're seeing in other places.
Do you mean in terms of Masdar specifically? Just
no,
kind
I
of
don't mean Masdar specifically. I'm saying from the point of view of the region. We're talking about these massive stimulus coming from wondering or asking the questions, being a little bit devil's advocate, if you like. Are we taking sufficient position of our first mover advantage in the region, or are we missing the opportunity to leap even further forward ourselves?
If I understand the question correctly, I don't think we're missing any opportunity. I think we've already been in this region pretty alive to the opportunity in renewables and sustainable finance for longer than most you know, countries, regions around the world, to be perfectly frank with you. And if anything, people are looking to us to see how to do things. There are plenty of countries where we're now going and we're actually exporting the way we've done things in places like Saudi Arabia and the UAE, and countries like in the Stans are incredibly receptive to what we're doing. Not only those kind of emerging market countries, but also places like the US. They're learning things from little old, you know, Masdar in the UAE. We are a company, I get sort of bring it back to Masdar, but we as a company, we've kind of like reached a pivotal moment in our kind of corporate evolution where we've begun to grow, I would say, much more quickly than we have in the past, right? We are lucky to have a very strong shareholder in Mubadala that for many years kind of had us set up to, if you like, kind of plant little renewable seeds and pour on some water and turn those kind of little saplings to the sun. And we've essentially kind of developed projects from scratch. We're still doing that because, you know, that's our DNA. But on top of that, we're also now going into jurisdictions around the world, and we're making pretty sizable acquisitions, which are allowing us to very quickly grow our portfolio. And as a result of COVID-19, there are some pretty interesting opportunities that have arisen as a result, which we're making some big moves on.
Let's bring in our third speaker, Mr. Atanu Das, Vice President, Acquisitions and Project Finance at ACWA Power. If Masdar is the sort of national pioneer institution in the region, Atanu, I suppose ACWA Power has been very much the pioneer on the private sector side, in particular the power generation and achieving sort of record low levels of costs in terms of the generation, solar power, etc. So you obviously have achieved a lot. How do you see the last 6 months that Badar has described as being an accelerator for green finance?
Thank you, Sean. Good afternoon, everyone. And pleasure to be here. Look, Sean, I think I have a slightly different view from Badar's thought process that the last 6 months has been, there's been some sort of an acceleration of green energy initiatives and green financing. I think the writing was on the wall for the last couple of years. I think as an institution, I think it was more than 2.5 years back that I think, or maybe several years back that ACWA Power took the decision that we want to be technology agnostic and we want to, get into renewables in a fairly big way. And I think it was in 2013, 2014 era when we sort of made the pitch for getting into renewables and pitching for projects in places as far away as Morocco, when Morocco came up with what we thought was a renewable energy program, which was a sustainable renewable energy program. So from our side, I don't see that last 6 months have sort of accelerated. I think the accelerator had already been pressed around a year and a half back, at least as far as ACWA Power is concerned, right?
Yeah, but let's just say on that point, I mean, there was a fairly significant development for ACWA Power just in the last few weeks where the Saudi Sovereign Wealth Fund has taken a majority stake in ACWA. That has to be a sort of a groundbreaking moment in of itself. I mean, the why of it might be unrelated to the sort of this acceleration idea, but nonetheless, it has just happened.
That's correct. But again, one has to factor in the perspective that this announcement of PIF evaluating an increase in the equity ownership in ACWA Power was actually an announcement which was made around 2 years back. And PIF actually came into ACWA Power in 2013, not directly, but through one of their wholly owned subsidiaries, Sanabil. Right. Mm-hmm. So PIF's involvement with ACWA Power has been for more than 7 years now. And over a period of time, yes, they have sort of acknowledged the national champion role that ACWA Power has played as a developer of IPPs and IWPs, not just in the region, but also elsewhere as a Saudi homegrown developer. And I think we are humbled by the fact that, they have taken one of the largest sovereign wealth funds in the world have actually taken on the initiative and have sort of come into ACWA Power and increase their equity ownership in ACWA Power quite significantly. We remain, by the way, a private sector player. We will remain, for us, it will be business as usual. We'll remain as nimble as we always were.
It must help a lot in your sort of rating, your ability to borrow access capital at very competitive rates.
That is correct. That is correct. But there is one element that I have to highlight is that, we in ACWA Power, whenever we develop projects, we are what we call serial users of limited recourse and non-recourse project financing. So essentially for all the projects that we finance, it is largely through cash flow based financing and asset based financing, and not financing wherein we as sponsors actually put our balance sheet on the table. Of course, yes, the involvement of PIF as a very significant shareholder in ACWA Power lends a lot of heft in our own balance sheet. And that automatically translates into us having a significantly more heft in the financing markets as and when you go for project financing. But to be clear, I think the financing that you raise is typically limited recourse and limited to the cash flows of the project that we finance.
Badar, you wanted to come back in there. I mean, I would also acknowledge in the last week or so funding to Yellow Door, which is not a startup anymore, but nonetheless a smaller player in the renewable space, solar space, and Apicor, the regional sort of financing agency for energy projects, has put in $50 million to Yellow Door as a most recent example of new money coming into that space.
Yes, Sean. So it actually sort of highlights two things. One, within the region, of course, each economy, each country is a different development stage with respect to where it is in the energy transition cycle. For example, Atanu mentioned Morocco, which was a lead in that sort of space maybe 10 years ago, but of course at a smaller scale. You have Dubai, which has gone in, into a massive sort of initiative under the 2050 vision that they have of, at least 50% of their energy mix to be under the green energy. And it is that sort of initiatives which differentiates the level of financing and the size of the sort of opportunities that are arising out. Smaller economies which have smaller footprint need to rely more on private sector players like ACWA. ACWA is probably 10 years ahead of what Yellow Door is right now. So it shows you how the progression happens in developing economies or emerging economies till the time that the proof of the the concept is established and the appetite is in place.
But
Now,
one would suspect that without ACWA, without Masdar, you would never have a Yellow Door. I mean, these.
absolutely, the industry leading initiative that the likes of Masdar and ACWA bring to the sector and to the regional economies is the fact that they are able to replicate technology transference, transfer of good practices from global experiences, from global markets, and adopt them in regional spaces. And that is where then you sort of again have the second initiation and you move that to further emerging economies. Now, as Bruce mentioned, Masdar going to Uzbekistan, ACWA going to sort of sub-Saharan Africa. That is where the next evolution will happen, and local finances will support them in that journey. Whereas new initiatives will start cropping up in the region again.
Bruce, on the point you were making earlier, you referenced these developments around the world we've seen at this time of the COVID infrastructure investment that has been brought forward, mainly for the economies like Europe and Japan to have a stimulus recovery package. And we're probably going to see something similar in the US. With the new Biden administration, again, a significant amount of state funding or facilitation for green investment. I'm wondering, how does a player like Masdar or other regional players, how is that an opportunity for you to compete in those geographies? What do you bring to the table, do you think, that can be competitive? And do you have access to the right amount of capital in order to compete in those other markets?
What do we bring to the table that perhaps other developers don't in places like the US, which I think the US is the second largest renewables market in the world. Just a quick data point, we recently announced the 50% acquisition of a portfolio of renewable projects in the US from EDF Renewables, one of our strategic partners who we've done projects with around the region. The sort of thing that our partners like about us, and I'm sort of speaking for them, but I'm sure they wouldn't mind, is, and I'm being a little bit selfish here because I work obviously on the structured finance side of things, but I think one of the things our partners really like is the level of sophistication we actually bring to the table in terms of the financing aspects of projects. And so even the likes of EDF Renewables and Equinor and so on, I think they really value what we can bring to the table. And we've demonstrated that time and time and again, where we've often been the ones leading that particular work stream. I also mentioned before that we started off as a pure developer, whereas I think now we're shifting much more towards being an investment company in line with the kind of slight change in the DNA of our shareholder. So I think what we can also bring to the table is people who really understand the risks of projects and at the development stage.
I mean, when you look at that piece, Bruce, just to clarify, obviously Masdar has always existed within the family of Mubadala, but now it appears it's much more integrated. You yourself have come from Mubadala to Masdar. Does that indicate a much tighter integration of the Masdar opportunity with the Mubadala kind of engine and financial muscle behind you?
I think me moving to Masdar is actually just a reflection of the fact that Mubadala wants to see kind of people within its corporate units kind of sit at the actual asset level. So whereas before I was a generalist helping sector business units like Masdar, I might be working on a hotel financing in New York one minute and then the next minute a wind farm in Saudi Arabia. I think what Mubadala is keen to see now is much more specialization in terms of its people. So I think that's all it really reflects. I don't think there's much more to it. But like I said, Mubadala in the last 2 years merged with IPIC. It now has a much more investment orientation, and Masdar being one of its sector business units, if you like, kind of has aligned with that. And so we are still doing development, right? We haven't shifted to do pure, M&A investments around the world, because we as a company, Masdar as a company, is incredibly good at developing projects. Like, we've proven that time and time again. And we've also got a very good track record of financing projects in pretty creative ways, not only here, but and when I say here, I mean the UAE, depending on where people are watching this, but also elsewhere around the world. So I think those are kind of, for me, and it's a little bit selfish, those are kind of the sort of biggest factors that we have to our advantage when we're participating on projects around the world.
I suppose a bit like Atanu, a bit like ACWA. I mean, in some ways, Masdar and ACWA are starting to look a lot like each other in the sense that Masdar has Mubadala and ACWA has PIF. And these two major sovereign wealth funds, major national institutions, have the ability to and the access to capital that can either of you could go global in a way perhaps that you couldn't have previously.
Yeah, I mean, I think there are many similarities, and the ACWA guys can kind of probably highlight some of the differences. I mean, I think ACWA is really focused on kind of emerging markets, whereas Masdar does have a kind of a more global outlook and is prepared to go into places like the US and Europe. We've got multiple offshore wind transactions in the UK, for example, and we continue to grow that particular portfolio. And we've obviously now made this enormous investment in the US as well.
I mean, you have that track record of developing emerging markets as well as developed economies. And Atanu, what are your thoughts on that question from the point of view of ACWA and the moving forward now with PIF as a majority shareholder? How does that set you up to compete globally?
I think we are already competing globally in the sort of markets that we have sort of identified as markets that we want to focus on. I think Bruce is absolutely right. I think there is a fundamental difference in the business plan that we have, in the sense that we do not look at, for instance, Europe or the Americas. Our focus area is primarily 4 or 5 blocks, the MENA region, possibly Jordan, the sub-Saharan Africa region, and especially focusing on the southern corner of Africa, and now focusing on East Asia. I think including Vietnam, Indonesia, and the Philippines. And lastly, as I think Bruce also mentioned, that there is a tremendous amount of work which is happening in the Central Asian countries, in the stans, so to speak. So Uzbekistan and Azerbaijan are places where we are very active, as is Masdar, to put it in a very
when you consider that structure, both for Masdar, Mubadala, and for PIF ACWA, that scale sets you up well, because inevitably there's a lot more competition coming into your space now. Total, Shell, all of these major energy companies are now moving into your space. That's one of the big changes on the back of this year, I would suggest. And you need some muscle to compete with those guys.
Absolutely. I think we welcome competition, by the way. And I think we have been competing with the likes of Total and EDF and Masdars and the Angis of the world ever since sort of we were born, so to speak, right, in different geographies and different parts of the world. The one thing which I wish to highlight is that, while we are focusing on the green energy and the green space and the renewable space, one has to realize that ACWA Power is a technology agnostic company. I think we are we are a multi technology asset base. For instance, we have not only have got oil-fired assets, we also got a couple of ultra supercritical coal-fired assets, but we also have a significant chunk of gas-fired assets and plus renewables that you have. But what is to be highlighted is that while renewables will continue to grow, I think the way to look at our portfolio from a sustainability perspective is to look at the percentage of our portfolio, which is now what I would call decarbonized. And even today, when you look at the decarbonized part of our portfolio, which includes, for instance, CCGTs or gas-fired power assets, we are more than 73% or 74% of our portfolio of 37 gigawatts is actually decarbonized. And going forward, what we see is, and what we anticipate is that the decarbonized part of our portfolio will move to more like 90-95% as we go from 2020 to 2030. So the idea is that the sustainability part of our portfolio will grow. We will step away, very, very consciously from oil-fired assets, so oil-fired power plants, for instance. We'll step away very consciously from subcritical coal. But
it's going to be increasingly difficult to finance such projects.
Absolutely. And you are well cognizant of that. But as an institution, I think we have also taken a very conscious decision to work towards a more sustainable framework, and in terms of the assets that you are developing, the projects that you are bidding for. So,
Badar, as these projects, I mean, the incredible innovation from the likes of ACWA and Masdar, and as you mentioned, a much more competitive space now, but also competitive for financing, that there are multiple more options perhaps now for the likes of Masdar and ACWA that didn't exist before. How do you see the financing of this sector changing? We're seeing a lot more debt financing now, as well as obviously previously equity was more driven. How do you see it changing moving forward?
So in terms of financing, I think the appetite is increasingly sort of conscious of where it wants to find a home, which is sustainable, green, energy, and in essence, it is going to be a reallocation of the liquidity and capital pool that is available. I would like to highlight that the initiative will be married with the fact that existing assets will be, sort of churned out or, put out for refinancing to raise this capital that is required to invest in these new markets and new technology. So while on a global platform there is enough appetite, regionally you will have to have a combination of strategies of either arranging a refinancing of existing hydrocarbon assets, possibly the way ACWA has gone down, bringing in new partners who have ESG as a dedicated platform, which will allow them to deploy equity. So that is how the market will sort of develop, and banks will continue to chase where there is demand, which it's a natural way how financial institutions operate.
Bruce, just to wrap up on that point, in terms of, we mentioned Yellow Door a little bit earlier, but I would imagine Masdar or ACWA in your early days convincing banks to finance different projects was a lot more difficult than it is now, perhaps. But ultimately, that financing for that innovation startup structure like a Yellow Door or others in that scale, obviously we're seeing Apicor fund that 50 million credit facility, a multilateral development agency. Are banks or other structured capital, to use the word earlier, missing out on opportunities by being still too risk averse to support the SME, the startup innovation that could be possible in this region? What are your thoughts on that?
It's difficult for me to say, to be honest with you, because I honestly don't know what it's like for an SME in this region or anywhere else trying to raise financing. for us, I mean, we have a small corporate revolver in place that we use for working capital, but like ACWA, the vast majority of our projects are financed on a non-recourse basis. I don't know too much about the yellow door financing, but from what I've read, it looks like a relative to us, a relatively small corporate facility that allows them to do various smaller projects in various regions like Pakistan.
I suppose one of the things behind it is the idea that for more ESG sort of investment, that it is presenting opportunities for agencies like APICOR, which is the petroleum investment vehicle, to clean some of its decarbonize, if you like.
I mean, I think, to be perfectly honest with you, like I see absolutely no shortage of private capital for renewables companies or for renewable projects, whether it's here in the region or elsewhere. Like on the contrary, I think there's clearly a global shift of capital in the direction of renewables. And I think people are much more, and by people I mean banks and investors, are incredibly more well versed in the risk profile, right? They really get that renewables is not as risky as they perhaps once thought. And the GCC finance market is not in any way kind of isolated from those global winds of capital shifting. And I suspect that in future, many government-owned and privately owned corporates will, they'll have to up their green credentials to attract the financing that they need to do projects. But I actually think it's the other way around. I actually think that the real innovators and the real leaders in this industry are the companies like Masdar, like Yellow Door, like ACWA. And in actual fact, banks are like, they're pretty much kind of like hanging on our coattails, right? The banks aren't coming to us and saying you need to reposition yourselves, you need to do more in the ESG front, and so on and so forth. I think people just get it. They recognize that, like, you have to, if you wish to survive in future, you have to, start to adopt more rigorous ESG investment criteria. Otherwise, the reality is, like, the pool of debt capital will dry up for you. You'll find that there are no investors that have any interest in investing in your company. Nobody wants to partner with you. And then when you want to go into new markets, you'll find that there are regulatory, obstacles as well for you. So I think people kind of have figured that out. And now you're actually finding
that most recent.
Banks are now just like, okay, I want to finance you, and can we label this particular financing green? And for the likes of Masdar, it's like, sure, you can label it green if you want to, but from our perspective, it's always been green. It was always going to be green, right? But
and the good thing now, of course, ultimately from your perspective and everybody's perspective, it's in the money now, right? It's there is a great return to be had. Atanu, your closing thoughts on that point?
A couple of points. I think first point is, I think the funding raised by Yellow Door, who essentially are more focusing on the distributed side of the energy sector or the renewables developments, is, I think, quite significant. Personally, I have, although it's not an ACWA Power point, we are not in the distributed side, but I know for sure that there have been several small developers who have tried to raise financing in the local market for rooftop solar assets or rooftop solar developments, and they have really struggled. So I think the fact that we have Yellow Door actually going up the chain and actually getting a significant credit line from multilateral at this point of time is some sort of a game changer, and it'll probably
from a petroleum multilateral.
Yeah, absolutely. So that's point number one. Point number two is that in terms of being able to raise financing from an ACWA perspective, I think we have always felt that liquidity is not an issue for us. What matters is the quality of the liquidity that you are trying to raise, right? I think we don't, in any of our projects that you're trying to raise financing, we'll always get that liquidity. But we are also very discerning when it comes to the terms under which the liquidity is given to us. So that will continue to remain a challenge. I know for sure, and Badar will sort of be fully sort of appreciative of this, that within the region, there are very few institutions and banks who are willing to lend long and get into project financing on a limited recourse basis, right? Most of the banks who are in the project finance space or local institutions have sort of faded away from that market, and it's only a handful who remain in the project finance space. And that is not just for institutions in the UAE, but also, for instance, institutions in the kingdom, for instance, where we do a significant amount of our businesses. So from that perspective, there will always be the structuring part of it in trying to raise financing and the best possible financing for a project so that we are competitive in a bidding situation. That will always remain. And that is something that we as professionals will always strive to get the best possible deal for our projects. That's point number one. The other thing which I wish to raise is that, and I think this is something that Badar sort of highlighted upon, is that what we foresee going forward in the energy space, in the renewable space, is essentially a significant chunk of takeout financings or refinancing assets which are operational, for instance. And these takeout financings are coming in from the capital market side of it. So as things go forward, I do foresee a time where the takeouts of debt or project finance debt, which has financed the greenfield project at some point of time in the future, will be through a capital market issuance. We have seen green shoots of this. There have been 3 or 4 of these project bond takeouts which have happened, 2 of them in Abu Dhabi, one which is slightly different, but some slightly sort of innovative project bond framework that ACWA Power did a couple of years back. But what we see going forward, we'll see more and more greenfield projects being financed through bank money. And thereafter, at some point of time, the takeout through institutional money. And I think to that extent, I think the market, or the regional market, will become more and more sophisticated and probably become more and more aligned to what the current traditional North American market is. For instance, the North American market is currently a bridge to bond market. And I'm sure Bruce is well aware of it. I mean, they're active in both North America and Canada and the US, which is the hard money market. So that's from my side, that's something that you're going to see more and more going forward. And I think that market will develop. Where I think one more area that we would want to see a little bit of more focus is that when we do a green bond today we really don't see any kind of differentiator from a commercial perspective if you raise a green bond vis-a-vis if you raise a classical project bond.
It's a bit like no difference if you raise an Islamic bond.
Yeah, absolutely. Look, absolutely. So the issue is out here is that while we get an access to a potential pool of additional liquidity, right, in terms of the commercial aspects of it, we really don't see a real benefit as of now. But I think that is going to change. And frankly, that is also going to change on the bank side, because several European institutions are now focusing on ESG principles as part of their credit policies. And I think there will become a time when a credit is sanctioned, you have to tick a few boxes on the ESG side. And if you don't tick a few boxes, you have to pay a premium for that.
Absolutely. I think that becomes the next step in this.
Correct.
Starting right back where we started the conversation, Badar, and I'll give you the last word, is that the ESG is one of the accelerators to come out of this COVID transition moment. Badar, last word with you.
Absolutely. I think it's going to be driven by policy reform, which is going to drive the sort of requirement for ESG to be implemented or embedded across corporates. And that in itself will drive the required funding to meet those hydrocarbon or hydrocarbon neutral financing assets. That's going to be the differentiator.
Well, let's wrap it up there. Bruce Johnson of Masdar, thank you very much for joining us today. Atanu Das of ACWA Power, thank you very much for having your time with us. And Badar Chaudhry of Mashreq Bank, our host today, thank you for your time and engagement.